And in our top business story, the Emirate of Sharjah will arrange investor meetings this week and next in Asia, the Middle East and Europe, ahead of a potential debut issue of a sovereign Sukuk, according to local media reports. The benchmark size is usually understood to be upwards of $500 million, with the Ijara structure being a leasing arrangement commonly used by Islamic bonds. Sharjah appointed HSBC, Kuwait Finance House, National Bank of Abu Dhabi, Sharjah Islamic Bank and Standard Chartered to arrange the roadshows. The access to international markets will help Sharjah diversify its funding base, reduce costs and extend its debt maturity profile, according to information contained in a presentation for investors. Some $1.3 billion worth of government debt will mature between 2014 and 2019 and $133 million after 2019. 74% of the debt is in UAE dirhams, while the rest is in US dollars. Sharjah's gross government debt rose to 6.8% of gross domestic product last year, from 5.9% in 2012, with total public sector net debt standing at 16.8% of GDP in 2013. In January, when the Emirate obtained sovereign credit ratings from international agencies, Moody's Investors Service projected Sharjah's government debt to GDP ratio would stay below 10% in 2014. Moody's assigned on Monday a provisional rating of A3 to the proposed Sukuk issue, and Standard & Poor rates Sharjah's government debt at A. UAE corporate earnings grew 31.2% year-on-year to $9 billion during the first half of this year, compared to $6.86 billion in the same period last year, registering the best growth among the GCC corporates. According to Kuwait-based Global Investment House, the robust earnings were driven by Dubai, which was up 50.7%, which outperformed Abu Dhabi's corporate earnings growth of 22% year-on-year. The increase is largely ascribed to higher earnings in the banking and investment and financial services sectors. Global said Dubai's corporates were led by banks at 43.2%, real estate and construction 71.8%, and investment and financial services 160.9%. Abu Dhabi's corporate earnings expanded 22% year-on-year to $5.7 billion in H1 2014, driven by a 13.4% year-on-year rise in the banking sector's earnings, or 55.1% of consolidated earnings, to $3.2 billion during H1 2014. The investment and financial services sector expanded ninefold, with telecommunication also contributed significantly during H1, with earnings increasing 19.2% year-on-year. The energy sector was up 207.6% and growth in services increased 59.4%. In contrast to the other sectors, real estate's earnings declined 31.8% year-on-year. Across the GCC, corporate earnings in the region rose 14.5% year-on-year to $34.9 billion in H1. Dubai's maritime sector directly contributes 4.6% to Dubai's GDP, the equivalent to 14.4 billion dirhams. That's according to His Excellency Sultan bin Sulayem, the chairman of Dubai Ports, Customs and Free Zone Corporation and president of the Dubai Maritime City Authority. Bin Sulayem made this statement during a recent DMCA supervisory coordination meeting that showcased the latest updates and achievements in the efforts to boost Dubai's maritime competitiveness. It was also added that the sector played an active role in supplying the labour market, with more than 75,000 promising job opportunities to meet the demand for qualified human resources, especially in maritime operations, maritime engineering and ports, which accounted for 51% and 25% of the employment rates within Dubai's maritime sector, respectively. Abu Dhabi Islamic Bank and Barclays on Monday announced the formal completion of the sale of the UK banking giant's UAE retail banking business with immediate effect. According to a statement released by the banks, ADIB and Barclays stated that they will now work closely to ensure the seamless transition of more than 110,000 customers onto the ADIB banking platform. Clients will be supported by the 145 staff who have joined ADIB from Barclays, while continuing to operate out of their existing branches in Dubai and Abu Dhabi. After the transition, ADIB will serve over 700,000 customers across a network of 85 branches, 660 ATMs, internet and mobile platforms backed by 2 call centres. In May, ADIB said it had received regulatory approval from the UAE Central Bank for its purchase of Barclays retail operations. The largest Sharia-compliant lender in the Emirate agreed a $650 million deal with the British bank in April, following a competition in which both local and international players showed interest.